Okay, so when it comes to the world of finance, there's this one relationship that basically rules everything else: the trade off between risk and reward. And you know what? If you can get your head around this one concept, you're already way ahead of the game and making smarter money moves. So let's dive in.
It really all comes down to this simple question, doesn't it? Of course, you want bigger returns on your money. Who wouldn't? But the real gut check is, are you prepared for the potential roller coaster ride it takes to get there? That's the big idea we're going to unpack right now. All right, first up, the great financial trade-off. Seriously, this is like the number one fundamental rule of the entire game. So let's get our terms straight so we're all on the same page. What do we actually mean when we say risk? Well, in the simplest terms, it's just uncertainty. It's the chance that an investment doesn't do what you hoped it would, or worse, that you could actually lose some of the money you put in. It's the big what if in every financial decision. And then you've got the other side of that coin, the reward. I mean, this is the whole reason we even bother with investing, right? It's the potential gain, what we usually call the return, that makes taking on that uncertainty totally worth it. Let's look at a super simple example. Think of it like a seesaw. On one end, you have a savings account. It's safe, it's predictable, it's very, very low risk. But the reward, yeah, it's pretty much nothing. Now, look at the other end of the seesaw, stocks. They can go up and down like crazy, which means they're high risk. But that's balanced by the potential for much, much higher returns. It's the perfect picture of this trade-off in action. Okay, so this brings up a pretty obvious question, right? Why does this trade-off even exist? I mean, why can't we just have amazing returns with zero risk? Wouldn't that be great? Well, here's the logic behind it all. That higher potential reward is basically the payment you get for being willing to take on more uncertainty. Just think about it for a second. Nobody would ever choose a risky investment if it didn't come with the promise of a bigger potential prize. The higher reward is what makes you say, okay, I'm willing to take that chance. Now, it's really important to get this. Risk isn't just one big scary thing. It actually has a bunch of different faces, and they're definitely not all created equal. Let's take a look at a few of them. So, for example, you've got market risk. That's just the chance the entire market takes a dive. Then there's inflation risk, that sneaky one where the money you make is basically canceled out by rising prices. Credit risk, that's the fear that a company or government you loaned money to just can't pay you back. Liquidity risk is when you're stuck holding something you can't sell quickly without taking a big loss. And of course, concentration risk. That's the classic putting all your eggs in one basket problem. Every single investment has its own special blend of these risks. I know, after hearing about all those types of risk, it's easy to think of it as this big villain you have to avoid at all costs. But that's not the right way to look at it at all. Risk isn't inherently a bad thing. It's just the price you pay for a ticket to the show where you have a chance at real growth. All right, that's enough theory. Let's make this personal. Because honestly, the single most important factor in this entire discussion is you. This is it. This is the question every single person has to answer for themselves. What's the right balance of risk and reward for your specific life, your goals, and your personality? And look, you can get a pretty good idea by asking yourself 3 straightforward questions. First, what's your time horizon? How long until you actually need this money? Someone saving for retirement in 30 years can afford to ride out way more bumps than someone saving for a house down payment next year. Makes sense, right? Second, what are your financial goals? Are we talking about a vacation fund or your entire retirement? Knowing why you're investing changes everything. And finally, and this one is so important, what's your comfort level? Be brutally honest with yourself. How would you feel if you woke up tomorrow and your investments were down 20%? That gut feeling tells you a lot. Okay, so if you're going to remember just one thing from all of this, what should it be? Let's get to the crucial takeaway. And here it is. There's no magic formula. There's no single right level of risk that works for everyone. It is deeply, deeply personal. It all comes down to your goals, your timeline, and your ability to sleep soundly at night. What's absolutely perfect for your best friend might be a complete nightmare for you. So, I'll leave you with this to chew on. Now that you really get this fundamental trade-off, what's one financial decision in your life that you might start looking at just a little bit differently? Hopefully, this helps you navigate that whole balancing act with a lot more confidence.